just ask you to mute your audio for the time being? Thanks. Okay, so we are back. I can see some people have made it across to the room. Apologies for that, a bit of a technical issue there in terms of the broadcast. If people are gradually finding their way over here, so we'll just give everyone a little bit of time to come across before Brett starts presenting. And Brett is going to talk to us about dealing with regulators. So while I have the people in the room currently, I'll discuss this at the end, but just for everyone's benefit, our next webinar, which hopefully won't have a break like this at the halfway mark, will be on Wednesday, the 19th of March. That will be, the topic is going to be tax considerations in a business sales, along with the feedback email. With the feedback email today, there'll also be the opportunity to register for that straight away. I see some people are gradually filtering into the room. My apologies again for that technical issue. And also in terms of other upcoming events, we're just putting the final touches on hopefully a return to face-to-face events. And with that, currently we have events booked Perth, Sydney, Brisbane and the Gold Coast. Melbourne, where we would normally hold an event, is proving a little bit problematic in securing a venue. So we're still trying, but most of the venues in Melbourne are continuing to operate under very strong restrictions or are shut completely. So it's a little bit difficult to find a venue that can hold the numbers that we would normally have in Melbourne. But at this stage, we've booked Perth on the 12th of May, Sydney on the 25th of May, Brisbane on the 27th of May, and Gold Coast on the 28th of May. So keep an eye out. We will be sending out invites to those events. Like all of our events, they are free to attend, and hopefully all goes well and we'll be able to hold these face-to-face events in May, fingers crossed, on state border closures and those sorts of things. So we've got a fair chunk of the people have managed to find themselves back into the room. Again, my apologies for that technical issue. What I'm going to do now is introduce Brett Hart, who's going to do the second part of our presentation on defending against regulators. As I said before, in terms of questions, if you have them, just fire them in via the chat button.
Thanks, Adrian, and good morning to those who are in the north, and good afternoon to those who are in the south. We've set this topic because, whether we like it or not, the need to deal with regulators on a day-to-day basis by professional advisors is part of our world. There are plenty of organisations out there who have an enormous budget and who are paid to tell you how to live your life, and we have to deal with that whether we like it or not. I just need to... So who are the regulators? Well, in our world anyway, first off the top of the list, the Australian Taxation Office, and then offices of state revenue in each state. Almost all of you will have been dealing with or have dealt with the bottom three on that slide, the Tax Practitioners Board, CPA, or Chartered Accountants, or similar accounting regulatory bodies, and of course ASIC, for those who are licensed financial advisors. What we do see more of these days, though, is having to deal, even for you as accountants and financial advisors, having to deal with organisations like the Fair Work Commission, even if it's only for your own employees, but often for employees of your clients. Workplace health and safety, of course, and in recent times, and COVID times anyway, biosecurity organisations and rules of one sort or another, and occasionally anti-discrimination. So probably just as important as identifying who the regulators are, who you have to deal with or your clients have to deal with, is having a bit of an idea of what are their powers and what are their likely activities. First of all, most regulators, particularly government regulators, like revenue authorities, will be wanting to review the affairs of a client or review a transaction they may have been involved with, and that review may progress to an audit, and an audit may progress to an amendment of assessments to income tax, capital gains tax, GST, stamp duty, land tax, anything that of a revenue nature. And that issue of an amended assessment will be something that is part of the KPIs of most people employed by regulators. And in the course of that process, they will be trying to access documents and information belonging to your clients, and sometimes information belonging to you as advisors. And the ability to access information, particularly in relation to the tax office, is quite significant. Some of the more senior practitioners in the room might remember Section 263 and 264 notices issued by the tax office to produce documents and files and information and occasionally attend interviews. Well, those powers are still there. They're now there in Section 353 of the 97 Act and are used more and more regularly these days, that we find anyway. For some regulators, their goal is to decide to prosecute someone or not, and you're all familiar with the Tax Practitioners Board there and the ability for them to take away your practising certificate, maybe issue fines and penalties or public censure notices. The dreaded email or letter with a government or semi-government letterhead on it asking you or your clients to deliver certain information is often the first warning that you have of any interest by a regulator in your affairs or your client's affairs. Those notices or that first contact needs to be very carefully considered. The reason being that there are time limits, and they're very strict time limits. So we'll come back to that, but your first duty overall is to engage with the process. Even if it's a nasty letter, open it, read it, maybe grab a coffee before you read it, but read it and deal with it. Don't panic. Probably in the very first instance, you probably don't even need to call the client. What you do need to do is be very clear in your own mind of what the request is about. Set your own diary entries for deadlines and when things need to be provided and so on, and then go and have a chat to your client or get them in and talk about what sort of information is being sought and what sort of queries may be evident from the initial contact from the regulator. If the notice arrives late, and it's not uncommon for at least the tax office to issue notices very late in the day, particularly at 5 o'clock on a Friday afternoon or Christmas Eve, and some might say that's deliberate, but that's what happens. And the timelines to respond because of other priorities and other events are very, very short. If in that process you believe that the regulator hasn't provided you or your client with a level of procedural fairness, then, well, one, take advice, but at the very least consider what would be a reasonable time frame for response and what would be a reasonable scope of inquiry. But before you respond, of course, as advisors, we all act on instructions. We provide advice, but when we're responding to regulators or to third parties generally, of course, we can really only do so on behalf of our clients based on their instructions to us, recognising that each of us have duties to our clients. Some of us have duties to, in the case of lawyers, to the court, and responsibilities under the various bits of legislation that accountants and financial advisors are regulated under. Again, diarise deadlines before you even pick up the pen to respond. If you believe you need an extension or your client needs an extension to respond to something, then that's fine. We very rarely see a regulator refuse that request for an extension, particularly if there are some reasonable grounds for it. And those grounds can often be, we've received this very recently, the information you're asking for is extensive and requires a commitment of significant resources to do it. Our clients would like X weeks to gather that information. We'll keep you updated with when we have it, and very rarely do we see a flat no in those requests. While you're doing that, that is a good time to take a step back, take a breath, and analyse your client's circumstances as objectively as you can. We'll all want the problem to go away. The clients do too, but our role as advisors is to look at this approach, look at this request, look at our clients' affairs, and try to make the most objective decision possible about how they should respond, what risks they might be exposed to, and again, if necessary, take it a step further and seek some external advice. The overall process, though, for an advisor is to try to control the flow and content of information. We can't stop a regulator accessing information. We can't stop their process of review and audit or asking questions, remembering that most staff who work for regulators are process-driven. They're not necessarily outcome-driven, and they just have a process they need to follow. Trying to stop the process generally is futile. There's no killer blow that we've been able to identify in recent years to deal with those things. You simply have to engage with the process, find out more about it, find out information from your client, remember your duties of confidentiality, and plan with them how you best release and deliver that information in a steady, planned and careful manner. We tend to reduce to avoid where we can telephone contact. Basically, it's because we don't trust the other side, and there's no reason to trust them just because they happen to be swinging a government or semi-government badge. In fact, quite the opposite. The people you're dealing with at the other end of that communication line are rarely accountable to you or to anyone. And therefore, it's best to keep communications in writing if possible. If there is a telephone discussion, then our strong suggestion is, one, plan it. It's a live event. Whatever you say in that discussion will be used at their end to progress their process. If you do have a telephone conversation, it's very good practice to follow it up with an email or a letter, just outlining what the discussion was about and confirming your course of action from there, because you'll find that quite often the regulators will do the same. And it's surprising how different those two versions of events often are. Generally, though, providing something within a reasonably quick time frame is better than flatly refusing to provide anything or providing information well after deadlines, because you run the risk of escalating the level of tension and intensity when, as advisors, our best use of our resources is to control that process as much as we can to give our clients comfort, give them the opportunity to get advice if they need to, and the opportunity to get their affairs in order if they have to as well. So if you are asked to produce documents and you, in the course of identifying those documents or the lack of them, the temptation is often to create documents that aren't there. And I don't mean fraudulently. Often there'll be a list of information requests by a regulator, some of which you just don't have. You might think, oh, the client should have that, but they don't. Don't yield to that temptation. Don't bring documents into existence that don't already exist. By and large, a regulator's powers are confined to the ability to request existing information, not the ability to make you put into existing something which doesn't already exist. Of the documents you are proposing to hand to the regulator, review them, copy them. If there are mistakes in the documents, identify the mistakes early and disclose those. It's not uncommon to find typographical errors or even errors in dates or content. Best you identify the errors early than wait for queries from the other side. And another saying that we have here is, don't answer the phone before it rings. Only answer what the scope of the request is. Be very careful about delivering information that goes beyond that scope. We wouldn't say a flat no, but generally not. Only answer the questions you're asked. What you ought to bear in mind is that communications between you and solicitors for the client and you and your legal advisors are generally subject to legal professional privilege. And there is an administrative concession, at least for the tax office dealings between accountant and their client in relation to tax advice and working papers. But that is just administrative. At the end of the day, the only thing that's subject to professional privilege is communications with solicitors or legal advisors in relation to the matters under investigation. Be very careful in any response, if you are responding to a regulator, in disclosing the gist of a legal opinion. If you disclose the gist of a legal opinion, and if the regulator is aggressive, there's a good chance they'll be able to say that you have waived privilege in relation to those documents on behalf of your client, and that would see a very unhappy client for a start, but also a good deal of stress landing on your lap as well. Whatever you give the regulator, keep copies, maybe photocopies, or it may be saved to a separate file, but you need to be clear throughout the process about what information is in the open domain and which you still have. You might think that as legal advisors, our job's to butt heads with regulators at every step, and sometimes it is, but in reality, we really have to accept that we can't stop the train once it starts, but we can help steer it, and we can control the speed of it, and we can control the content of what's going in there. Some regulators will have a genuine educational guidance philosophy. That is definitely not the tax office and not any of the state revenue authorities we've dealt with, despite what some operators may tell you that you're dealing with. It's not to say there aren't good people in those organisations, but as a philosophy, you can assume that they are not there to help you and your client. As we said, avoid butting heads if you can help it. Occasionally a little headbutt can help level the playing field a little bit, but again, there's no silver bullet here. We need to deal with the process, deal with the requests that are being made of us, and progress the thing to some sort of conclusion. By and large, a facilitated approach without completely yielding will be a better outcome than butting heads at every step. If in the course of all of this information gathering and working out what we need to answer and what we don't, if it becomes fairly clear that our clients are in a very poor position, then we have an obligation as advisors to address that, identify the risks, and in doing that, it may be that it's better for the client that some admissions are made or that some concessions are made early if we can see that this really isn't going to end well. Now, if that's the case, making an admission is not generally simply, oh, yes, we did the wrong thing. We'll always encourage a client to say, well, if we need to make a concession, we should make that concession in the context of the facts. We should, where we can, explain the concession as to what we've done. Look, we've done the wrong thing here. We missed that obligation. We missed that deadline or whatever it is, but this is what we've done to fix it. And we've seen that a number of times with the Tax Practitioners Board, where there has been some pretty poor conduct, but where there's an ability to recognise that and put in place processes to address it. Those are the sort of things that can help in looking at, well, where might this end? What might be the result here for the client? If the only thing we do is reduce the penalties and in some cases interest if it's a revenue authority, then that's a good thing. Always do that on advice, and be very careful at how you make admissions, when you make admissions, because the right information at the right time can make a big difference, particularly when you compare it to the wrong information at precisely the wrong time without an explanation. It can cause irreparable damage in the process of dealing with the regulator's queries. We often get the question from clients partway through the process, well, how long is this going to take? Can we bring it all to a head and fix it? Unfortunately, in most scenarios, the answer is no. Most regulators, as I said, are process driven, and their process takes time. In a typical tax audit or revenue authority audit, here's some of the typical timelines. There might be at least 2 or 3 months in the review by the time they first contact you or your client. They may come to a preliminary position in that time frame. If it goes past that, well, so be it. It's very rare that we would suggest that you bring that deadline forward. So let that go and use that time to help manage the flow of information and content of information being delivered to the regulator. If the process goes beyond that to an audit, then that, at least in the tax office world, is a different process and a lot more structured. It will take even longer. Once the audit is completed, there'll be a decision. The decision, in theory, could be brought forward to less than 60 days. We often see it taking much longer, sometimes months and occasionally years. Once the decision is made after the audit is completed, then in most circumstances there are review processes. Sometimes they're internal reviews, sometimes they might be things like QCAT or the various administrative tribunals in each state, or the AAT, or very occasionally the Superior Courts. And again, once you start an objection or review process, it starts by and large all over again. It's not uncommon to have a deep investigation, review, audit, decision, another review and so on take years, and 2 or 3 years. And in some cases, that can be in your client's favour, giving them time to deal with the process, time to deal with what might be the outcome and get their affairs in order. So this is not something generally which happens quickly or is resolved very quickly, as much as we all might like it to go that way. When you get to the pointy end of these sort of interactions with regulators and they are looking for feedback or looking for some information about your client's position, then it by and large is based on evidence, and evidence is factual. It's not opinions from you or anyone else about whether we're right or wrong, although sometimes in submissions that might be part of that, but the evidence, and I mean documents, affidavits, statutory declarations, emails, and so on are very important, and in most cases will rise and fall on the evidence. Poor evidence will generally lead to a poor outcome. Good evidence can often turn around what might seem on the face of it to be something terrible, but good evidence can often turn that around to a much better outcome. Try to avoid bald assertions or submissions or essays until you're very clear on the evidence and you've got the right evidence in front of the regulator at the right time. Always remember our duty of confidentiality and our duty to our clients to preserve their confidentiality, and especially in relation to legal professional privilege. We're conscious of our duties to our own regulators, the CPAs, chartered accountants, ASIC, and so on, and in our case as lawyers to our regulators in the Supreme Court. Those duties can be discharged. In other words, you can protect yourself, because sometimes it's your work that's going to come under scrutiny. In being conscious of those duties and fulfilling them the best you can will protect your position also as best as it can be protected in the circumstances. Don't be afraid to seek advice, whether it's from us or someone else, but make the phone call early or drop us an email early, because we do this for a living, and it sometimes helps to have a third party have a very quick look very early to try and set some rules and processes for you. So that's our very short précis of how to deal with regulators, and by regulators a very broad concept and very broad range of agencies, but these are the consistent themes that we can distill in our experience so far this year, the 40th year of the firm being founded. And we're very proud of it. So thank you very much for listening. I don't have any other content, Adrian. Might hand back to you to see if there's any questions.
Sure. So we'll leave obviously the questions open for a little while. Brett and I will be here for the next couple of minutes if you do have any questions. In the meantime, while we're waiting for any, just a reminder on those upcoming events. 19th of March will be our next webinar, and that will be on tax considerations in business sales. And we're certainly seeing an increase in activity in that world for a variety of things. With other things in terms of other events, as I said, we're returning to our face-to-face events, hopefully, borders permitting, in May. And as mentioned at this stage, the only place where we would normally have one that we're not finalised yet is Melbourne, just to issues there with venues. But at this stage, we've got Perth on the 12th of May, Sydney on the 25th of May, Brisbane on the 27th, and Gold Coast on the 28th of May. So keep an eye out for those, for the invite for those. When the feedback email comes back in relation to this event today, you'll also have the ability to register for the webinar, not the live face-to-face events, though that will come separately. If you haven't had the chance to do so, you can download the slides from both Brett's presentation and the earlier presentation from Peter. Despite some suggestions to the contrary, it was not a cyber attack that brought us down after Peter left. Just some technical issues here with the software that we've been using. But also in that feedback email as well, with that email will be the ability to download the slides as well. And also, as I mentioned earlier, if you want to hear from Peter, in particular in relation to that offer that he has in terms of the review, you can notify him/us via the feedback email as well. I'm going to leave that question because we are recording this webinar. So without any further ado, I think we'll sign off. Thank you for everyone for coming back. Apologies again for the slight technical issue there. Most people managed to find their way back onto the platform. But aside from that, we'll bid you adieu and hope you enjoy your Friday and look forward to seeing you again on the 19th of March. Thanks, everybody.